Hey guys, Jordan from Precondo here. One of the questions that I've been getting somewhat frequently over the past 2 weeks is clients calling me up and saying, hey, we want to add another investment condo to our portfolio, but we are seeing, the correction in the freehold market. We think it might lead over to the condo market. And as things slow down here and as rates continue to go up, if resale condo prices correct, is there going to be an opportunity for us to buy pre-construction, launches down the line at a lower price than launches we are seeing today? And the short answer to that question is no, probably not. And I'm going to get into why right now, but the reality is the margins on pre-construction, the margins on building a new condo are a lot thinner than you might think. So the resale market correcting doesn't actually have as big an impact on the pre-construction market as you would assume. So let's get into the numbers here. So I've showed this chart before on my channel numerous times. It is the developer profit margins in Toronto, specifically in the 416. You'll notice there, oftentimes they'll profit 7 to 13%. Now, in order to get a construction loan to build a condo, you generally have to, you have to show a 20% profit margin. Obviously, there are delays and unexpected costs with construction, so that margin can shrink over time. But in order to get a construction loan to build a building, you need a 20% profit margin. The key takeaway from this graph to me is that the average government charges per unit is $160,000. So when you buy a new condo from a developer, $160,000 of the cost in some way is making its way to the government through various things like development levies, taxes, parkland levies, etc. And we're going to get into that. Now, one of the big headlines right now is that the city of Toronto is proposing an increase in development charges, which I find very interesting because these charges are ultimately passed along to the buyer. So when you buy a new condo from a developer, some of this cost, some of the development charges will be passed along to you at the time of final closing, maybe $10,000, $15,000 of it, but most of it will just be baked into the price of the unit. So while the federal government is trying to make housing more affordable, or they say they're trying to through various policies, the municipal government, at least in Toronto, is without question making housing more expensive. So here's where we are currently. So for a 2-bedroom right now, the current development charge is $77,679. They are looking at bumping that up to $115,579. So you're looking at a $37,900 increase, or about a 50% increase in your development charges, which is huge. Now, to give you perspective on Toronto as a market overall, roughly 20% of the cost of a new apartment, and this is from Altus from 2019, so this has actually changed because development charges have gone up since then, but basically in 2019, 20% of the cost of a new condo was government charges. Now, that does include HST, but it includes development levies, parkland dedication, that kind of thing. So 20% of the cost, roughly $160,000. Now, what's really interesting to me is when you look at other major metros in North America, you'll notice that we are in an anomaly. Like we pay a considerably higher portion of the cost of a new home to the government than these other areas. So for example, here you can see Miami at 13.3%, San Francisco 9%, New York at 3.2%, and 6.2% for Boston. Again, we are at 20% of the cost of a new home. So in addition to development charges increasing, we have 2 new policies that I think are worth noting here. And thank you to Jeremiah from Colliers for pricing these out for me. Bathtub foundations and inclusionary zoning. So bathtub foundations, essentially my understanding of it is, rather than the upgrade sewer systems to be able to handle the capacity of runoff, the city of Toronto essentially wants most developments to have bathtub foundations. Now, this is obviously expensive and it adds to the cost of a building, which in turn means that you as a pre-construction buyer have to pay for that. This will add on average $15 to $35 per buildable foot. And then you have inclusionary zoning, which adds $25 to $50 per buildable square foot in Toronto, which is a requirement where 5 to 10% of your condo building has to be inclusionary zoning. So affordable rental units that are offered to households that earn $32,000 to $92,000. And we're going up from 5 to 10% of a building to 8 to 22% by 2030. Now, what's interesting is there are studies done in other markets that have made inclusionary zoning a requirement to build, for example, Portland. And what happened in Portland after the inclusionary zoning was implemented is we saw a massive fall off in new housing permits and applications because developers just said, you know what, no, I'm going to go build somewhere else. Because obviously it makes it considerably more expensive to build, and sometimes the market appetite just isn't there. So there's going to be different areas where you'll have to commit to a different percentage of your building in inclusionary zoning. So a good way of looking at it is inclusionary zoning makes housing more affordable for those who need it most at the cost of the middle class, essentially at the cost of you and I, the people buying pre-construction condos. So it makes housing more expensive for everybody, everybody else, but helps the lower income folks. So rough numbers. Let's run through some rough numbers to give you just sort of a picture of what these new policies are going to do to the cost of a new condo in Toronto. So development charges, you're up 48%. So on a 2-bedroom, 800 square foot unit, you're looking at a $37,900 increase in what it already cost to build. Inclusionary zoning, you have a $20,000 to $40,000 increase in the cost to build that 800 square foot unit, depending, of course, on where the building is located and the percentage of the building allocated to affordable housing. And then you have the foundation policy, which you're looking at a $12,000 to $24,000 increase. So all in, you're looking at a $70,000 to $100,000 increase in the cost of your average 800 square foot 2-bedroom condo, which of course, that cost ultimately will just be passed along to the buyer, because the margin doesn't allow for developers to eat that. They would just not be able to build because they wouldn't be able to get their construction financing because they don't have the margin to support. And none of this includes the rising cost of building a condo in Toronto. So for example, we saw a 20% increase in high-rise construction cost from the fourth quarter of 2019. And when you look at the last 2 years, what's interesting to me is the 905 markets have better margins, right? Land costs are lower, it's easier, cheaper to build, and generally the development fees are often lower too. So if you talk to developers, you'll find that they'll tell you it's more profitable to build in the 905 markets as a general rule of thumb versus the downtown Toronto, the 416 market. You can see here that on average in the 905s, we went from a $600 per square foot launch price to a $922 per square foot launch price over the span of COVID. For the same period of time, we only saw about a 15-20% bump in the price per square foot in Toronto. And most of that is not derived from the resale market doing really well, but simply because the cost of construction has gone up. In short, you are unlikely to see much price correction in the pre-construction market, if any at all, especially in the 416 markets, because the margin just isn't there to allow them to launch cheaper. Now, the caveat here is every once in a while, you do get a really well-priced launch. For example, Westerly 2 last year at Islington and Bloor came out right on the subway line at $1,000 a square foot, just over $1,000 a square foot. And it was probably the best deal I've seen in the last 2 or 3 years. This can sometimes happen if the developer has been sitting on a piece of parcel of land for a long period of time. And so their cost basis is very low. And so they can actually, they have more margin there. Now, but more likely when the resale market slows down, what you actually see is what you saw at the beginning of COVID. Developers just don't launch their product, right? If they can't get their $1,500 a foot, which is what it's going to cost to build, plus their 20% profit margin, then they just won't launch it at all. They're not going to suddenly correct down to $1,350 a foot because that's where the resale market is. They're just not going to launch the product, which means that less housing starts happen. And that means that 5 years down the line, you have less new housing stock coming to market, which in turn obviously drives up the price of existing housing stock. And it's important to remember that over the longer term, housing replacement cost exceeding the cost of existing supply on the housing, essentially resale units on the market, is of course bullish for a market, assuming you continue to see population growth, right? And that's a big reason why I'm so bullish on Toronto in the long term. It's just so expensive to build in the city, far more expensive to build than it is to just buy something that exists already. However, in the short term, credit supply and the cost of capital, so your interest rate, and the sentiment surrounding the market, especially for investors, is what drives the market. So when you're looking at a short term, like a 1-year time horizon, sentiment is far more important than what new housing costs. So the short answer to all this is if you are somebody who's looking to buy exclusively pre-construction, you are not open to a resale opportunity, then no, waiting's just going to cost you more money, especially as these policies start to roll in to the cost of building. However, if you're someone who's looking at the resale condo market, then yeah, waiting, if you believe that the market's going to correct, then yeah, waiting will provide you with some buying opportunities. I will leave you guys with that. Thanks for stopping by. I will see you guys next week.